Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Lygend Resources and Technology Co. Limited annual report. Lygend Resources and Technology Co. Limited offers a diverse range of businesses and services across various industries. At the core of its operations are the production, smelting, and trading of nickel products, including nickel ores, ferronickel, mixed hydroxide precipitates, cobalt sulfates, and electrodeposited cobalts. In addition to these primary activities, Lygend also manufactures and exports machinery and equipment for core smelting, such as furnaces. The company provides technical support to its clients, ensuring a seamless experience in the production process. Furthermore, it engages in trading activities, including laterite nickel ore, send, and ferronickel. Beyond these core services, Lygend has diversified into new energy technological development, logistics and shipping services, project management, industrial real estate business services, and business management services. This comprehensive range of offerings positions the company as a one-stop solution provider for its clients across multiple sectors. Lygend Resources and Technology Co. Limited market capitalization of $30 billion is significantly larger than the average industry peer of roughly $2 billion. This shows that Lygend Resources and Technology Co. Limited holds a significant advantage in their industry. Lygend Resources and Technology Co. Limited trades at a lower price-to-earnings ratio of 9 times and a higher price-to-book ratio of 2.08 times relative within the industry. Despite the industry trading at relatively low valuations, the stock matrix does not show much. Investors should evaluate if the business has potential earnings that is sustainable and if the assets are valuated rationally. The leverage on the balance sheet appears elevated, with liabilities of 53% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased over the past 5 years, which is normal for a growing company. Asset and equity growth have outpaced liabilities, suggesting balanced and healthy expansion. Shareholder equity has increased on average, but the growth is not consistent year over year. This may indicate one-off events such as asset sales or capital raises, rather than durable business performance. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 3.5%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth for the company can be categorized into several key areas. Firstly, the Chinese mainland market has seen a significant increase in revenue, with a 34.22% rise from 2024 to 2025. This is largely due to the growing demand for nickel and cobalt products, driven by the increasing production of new energy vehicles and power batteries. The sale of nickel products has also seen a notable increase, with a 33.6% rise in revenue. Additionally, the company's flexible procurement and sales strategies, refined operational management, and breakthroughs in key operational indicators have all contributed to its revenue growth. Furthermore, the company has benefited from various market trends and government policies supporting the industry. These include the rapid promotion of new energy vehicles, national policies supporting the industry, growing demand for nickel as a raw material for power batteries, and increasing production and sales of new energy vehicles in China. In terms of specific products, the company's revenue growth can be attributed to the increased market demand for high nickel 300 and 400 series stainless steel, as well as the stable full-load production of HPAL projects. The company has also seen an increase in revenue from nickel products smelting business, procurement and sales of trading nickel ore, and sales volume of nickel-cobalt compounds. Overall, the company's revenue growth can be attributed to a combination of market trends, government policies, and its own operational improvements. Net income experienced a significant surge, with increases of 47.9%, 53.1%, and 44.1% from one year to the next. This substantial growth can be attributed to various factors. One key reason is the increase in market prices for nickel ore, which led to higher gross profit margins for trading businesses. However, not all segments saw an improvement. The production business witnessed a decline in its gross profit margin due to rising costs of raw and auxiliary materials. Additionally, the commencement of domestic ferronickel production further contributed to this decrease. In contrast, other businesses and trading operations benefited from the market conditions, with their gross profit margins increasing by 0.9 percentage points and 1.9 percentage points respectively. Overall, these changes reflect a complex interplay between market trends, operational adjustments, and strategic decisions made by the company. The company's financial performance indicates that it is struggling to generate positive operating cash flow. The net operating cash flow for 2025 is a significant negative amount of RMB -12,003,000. This suggests that the company is experiencing difficulties in managing its day-to-day operations and generating sufficient revenue to cover its expenses. Furthermore, another figure on page 11 shows an operating cash flow of 1,765,942 for 2025. However, this value appears to be inconsistent with the surrounding numbers and may be an error or incomplete information. Regardless of whether this figure is accurate or not, it does not change the overall picture that the company is facing challenges in generating positive operating cash flow. The company's debt level has undergone a significant transformation over time. According to the financial reports, the total debt increased by RMB 750,255,000 from RMB 7,882,268 to RMB 8,632,523 on page 4. This substantial increase in debt is further reflected on page 39, where indebtedness rose from RMB 13,852.3 million to RMB 18,615.7 million. These figures indicate a notable escalation in the company's debt level, suggesting that the financial situation has become more precarious over time. The performance of various regions in the industry can be summarized as follows. The Chinese mainland stood out as a well-performing region, with revenue increasing by 33.5% from 2024 to 2025. Indonesia also demonstrated strong performance across multiple projects. In Indonesia, the laterite nickel ore hydrometallurgy project, HPAL project, reached full capacity operation, while the equity-participated HJF project operated stably. The KPS project under the RKEF project also achieved full capacity with 6 production lines in place. Furthermore, improvements were noted in the technological process at the Obi Island Industrial Park. It is worth noting that no regions were explicitly mentioned as performing poorly. Overall, these results indicate a positive trend in certain key regions within the industry. Management's outlook for the company is centered around achieving comprehensive control and optimizing production processes through the implementation of a lean management system. This will enable the company to establish leading cost control capabilities in the industry, setting it apart from its competitors. In addition to process optimization, management aims to build core advantages through talent development and corporate governance improvement. This strategic approach will not only enhance operational efficiency, but also promote sustainable development within the Obi Island Industrial Park. Furthermore, the company is committed to creating a sustainable nickel resource ecosystem through technological innovation and industrial synergy. By leveraging these advancements, the company can optimize its operations and reduce its environmental footprint. Management is also aware of the importance of managing foreign currency risk, with plans to hedge significant exposures when necessary. This proactive approach will help mitigate potential risks and ensure the company's financial stability in an increasingly globalized market. The company has made several strategic moves through acquisitions and divestitures. In terms of acquisitions, the company has entered into a joint investment with an Indonesian partner to develop hydrometallurgy and pyrometallurgy projects on Obi Island. Additionally, a long-term supply agreement for laterite nickel ore was secured with the same Indonesian partner, effective from 2021. On the other hand, the company has also made divestitures, including derecognizing certain bills. Specifically, the company has written off endorsed and discounted bills totaling RM 87 million and RM 80 billion, respectively. These moves demonstrate the company's efforts to optimize its operations and financial position through strategic investments and disposals. The company's financial history reveals a commitment to rewarding its shareholders through dividend payments. A notable example is the payment of a final dividend in 2024, amounting to RMB 0.35 per share. This indicates that the company has prioritized returning value to its investors by distributing a portion of its profits. Concerns about inventory buildup or supply chain disruption are evident throughout various pages of the extracted summaries. On page 2, it is mentioned that inventory buildup and supply chain disruption concerns can lead to increased costs of sales and other operating expenses. The issue of inventory buildup is highlighted on multiple occasions, with specific mentions on pages 11, 20, and 40. This suggests a recurring problem that may be impacting the company's operations. Furthermore, page 20 notes that Indonesia's nickel ore quota permits were shortened, and the country adjusted its nickel ore royalty rates. Additionally, the United States imposed tariffs on steel derivatives, which could potentially disrupt supply chains. Page 25 mentions global supply chain disruptions as a potential risk factor for fluctuations in raw and auxiliary materials prices. This indicates that external factors can impact the company's supply chain. Lastly, page 26 highlights the potential for supply chain disruptions due to ongoing geopolitical conflicts in the Middle East affecting shipping through the Strait of Hormuz. These concerns demonstrate the complexity and interconnectedness of global supply chains. That concludes the financial summary for Lygend Resources and Technology Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.